Welcome to the Snowbirds Expat Radio Podcast, powered by the Snowbird US Day Tracker app. I'm your host, Gerry Scott, and my goal is to give you answers to your cross-border questions, to ease the stress of a cross-border move or extended trip, and to keep you up to date on all you need to know with cross-border rules and regulations. Now let's get into the show. Well, guys, welcome to the Snowbirds Expat Radio Podcast. We're excited to go over today's topic, which is we're going to be discussing the 12-month rolling calendar and the 183 days over 3 years. And today we have Kirill from Trowbridge in Toronto, and we have Logan out here in the West with myself in Vancouver. And guys, welcome to the show, and tell us a little bit more about your firm and what you guys are doing before we get into these questions that have confused even myself over the last every day. So go ahead, guys. Welcome to the show.
Thanks so much. Thanks for welcoming us. And I'll start just by saying that our firm specializes on US and Canadian cross-border tax matters. We are tax focused, we are not immigration focused, but both areas also intertwined that very often we speak not as experts, but you should also discuss this matter with your immigration advisor or things like that. But our focus, as I said, is cross-border tax matters. Logan and I mostly do personal taxes. At our firm, we have also corporate tax departments, but really this is our pretty much day-to-day work is dealing with people who have cross-border exposure, including snowbirds. Yeah.
And Logan, out here in the West.
Yeah, the West is the best. I think between Kirill and I, we have other teams as well, and our whole entire Trowbridge team that does this work. Between the two of us, we're 30 plus years of experience in the tax world, and obviously plenty of clients, moving to and from, and also traveling, especially to the U.S. for the good old winter of Canada. So it's a pretty common question we get here a lot. So happy to help.
Well, let's get into these questions, and before I start to ask these questions, is that I'll tell you what, I've got two incredible experts on the show today. I'm just going to ask the questions, and I'm going to sit back and be a sponge. And what we'll do is we'll create some really good content. So I get about 5 calls a day regarding this 12-month rolling calendar. So I'm just going to send them the podcast. Very few words. I'm just going to put you guys in front of them. So the maximum presence in the United States is limited from an immigration and a U.S. tax residency perspective. What is the difference between tax and immigration?
I'll start by saying that what they have in common is the magic number 183. What it is, it's basically half a year, or in other words, most of the time. And that's really the logic behind these tests. For tax purposes, immigration, it's where you spend most of your time. And for immigration purposes, and not an expert at all, but under B visas type, as a visitor, you are not supposed to spend more than 183 days in a 12-month rolling period, and that's what the tracker does. My understanding, it just tracks whether or not you cross that threshold. Interestingly, the same threshold is applicable for tax residency purposes, but mechanics are a bit different. So we can discuss that, and that's a substantial presence test. We can discuss its mechanics as the next point. But really, 183 is a magic number. It just determines a bit differently for immigration and tax purposes.
It's very interesting because we've had other guests on the show here today, and they said that, I get the immigration is probably the toughest because these immigration guys have a really, really difficult job. Their job, they have discretion, and there is a border there, and they want to make sure that you're in the country legally. May it be a B2 visa as a visitor heading down south. But when we talk about this 12-month rolling calendar, a lot of folks say it doesn't exist for the average snowbird. But now a lot of these snowbirds are being told, and maybe they're just tightening things at the border, but they're now bringing up this rolling calendar. And, I went on to GPT, I think it's called Chat GPT, asked the questions, and they always come back and saying, yes, there is a 183. Now we don't have it on our app. We just have it on the 2022, the 2023, 2024, where you take the calculation and carry it forward. But we will be adding the 12-month rolling calendar. But this is confusing. So my understanding is that you can never spend more than 182 days in any 1 year in United States in a calendar year. Is that basically saying the same thing?
Very generally, yes. And for tax purposes, unlike immigration purposes, you can spend more than that, but there will be implications. So that's a bit of difference, because for immigration purposes, that can be a threat to your visa status. You're really breaking the rules. For tax purposes, that may trigger tax residency. And by itself, it's a legal thing, but usually people don't want to do that. And before going there, I think it would be good to discuss the mechanics of SPT, or substantial presence test, because hopefully this will explain why staying under 183 days is important for tax purposes as well.
Yeah, so on our app, when you go into the home screen, we've got so many more calls this year than ever before. And we give people the warning to say, listen, you've got 15 days left before your 183 over 3 years expires. And all we're telling people is that if you do exceed 183 over 3 years, we want to make sure you fill out the 8840. Just making sure you can prove you got closer ties to Canada than the United States. What can you add to that concerns that people should have?
Logan, do you want to cover the mechanics of tests, SPT calculation?
Well, yeah, yes, absolutely. So with the SPT, really it's 122 days on average per year. So if you're getting above that, that's when you potentially, as your app would then tell them, hey, you're over 183 days at your 3-year period, which is basically the current year plus 1/3 last year plus 1/6 of the year 2 years prior. So once you look at that, if you are going to be over that 183 days for SPT, yes, there is a closer connection for the 8840, as you mentioned, Gerry. And that's a pretty simple form to do. And like I said, you show you have closer ties to Canada or to another country in that matter. Really where it becomes a little issue is when you get to the 183 and above. That's when we have some more concerns from a tax reporting perspective. Even if you're under 183 days and you do that 8840, that's from a federal perspective. Unfortunately for the U.S. as compared to Canada, is every state is their own tax jurisdiction. So even though you may be excluded from a federal level for tax, you may still have some state implications as well. So that's where even if I'm only 182 days from the SPT calculation, we're under 183 days in the current year, so you're excluded for closer connection to Canada, but there could be some state issues as well. So those are some of the considerations they're kind of always considering when looking at these days and what your obligations and exposure could be.
Do you find that a lot of these Canadians, these snowbirds, they're almost intimidated by this 8840? It almost feels like there's disclosure and the questions are coming back. What happened? Well, we know what the problem is if you don't fill it out. You could be deemed a U.S. tax person. But is there, I always tell people, I give them the question, we know by January 1st, 2025, what your 3 previous years look like. I tell them to file the form or send in the form right away. Is there more to it? I mean, is there a deadline that has to be done for a certain time?
Yes, the deadline is April 15th to submit the form, and the recommendation is always to file it on time. It's a simple form, if you think about it. It's just to state your facts and circumstances, and not filing it has much worse implication because you're, as you said, you put yourself into risk of being treated as U.S. residents. Filing that form protects you from that. So the form, I wouldn't view it as intimidating. In fact, most of our clients do it themselves. It's just an honest statement of their facts and circumstances, basically to confirm the fact that your home in case of snowbirding to the US remains in Canada, where you live, what's your facts and circumstances, just answering the questions. That's really what's required there.
I was going to quickly bring up this form here on the. We do have made it available on the app itself, and I just want to see if there's any stumbling parts on the actual form itself. Okay, guys, I got it on my phone, so I better put on my glasses here. I always tell people straightforward. The answers are Canada, 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 Canada. Is there any part of it now? People don't get a notification when they send this in. There's no notification. We've always told people to take a photocopy of it and keep it for yourself as well. Is there any other tip that you would encourage people to, if they're going to file this on their own, that they should be doing?
A good idea is also to keep a copy of mailing receipts in any form, something having a date. So probably it's best to get it stamped or keep even receipts from the office where you mailed it from Canada or from the US to the IRS. And taking a picture of both the form and receipt is also good support for the fact it was filed. You never know. It's better be safe than sorry. So that's what I normally recommend to clients. And yeah, timely filing is the key, I think.
So maybe sorry, go ahead, Logan. You had a
I was
thought. Go ahead.
going to say, with that timely filing, with our plenty of clients who, especially when mailing from Canada, you can mail it on the day and they're going to get it 2 weeks later. And there could be a case where it happens with tax returns as well, where the IRS says, hey, you filed this late. Having that proof of mailing is very key. So again, that's the most important thing, and keeping that kind of saved in a PDF document or somewhere on your system for as long as it can be. Generally, is 6 years. You want to keep those documents on file.
So is there a difference between individuals filing it themselves and the accounting firms? Is there an electronic version that you guys can send in and then get notification, or do you mail it in as well too?
Yeah, we mail it in. Unfortunately, for these type of forms, most non-resident related forms are going to be mailed into the IRS.
Yes, IRS is unfortunately, or fortunately, I don't know. It's the way it is, but many things are still paper filed. We have, as a firm, we have processes in place to ensure we have all the support. And yes, as it was mentioned, not hearing back from the IRS is a good thing because they normally would send a notice if there is a problem, and a lot of forms just go in there. Taxpayers or tax professionals keep support of filing in any format and hoping that nothing comes back, because in such cases, it's normally something's wrong if you hear back from the IRS.
So yeah, so hopefully I heard that. So does the IRS does not notify people that they've received it, only if there's a problem. Okay, and how common is that problem when people are they're concerned? And of course, that's when you guys get involved. People call you up and say, "Hey, I'm offside with my 8840. How can you help me?" Are you seeing that out there?
Not really often, no.
Okay,
No.
so it's pretty straightforward.
Yes, yes. I don't really remember seeing issues with submissions. So as long as it's mailed, and I can imagine that there are hundreds of thousands of such forms, if not millions, filed every year. And definitely the IRS does not have resources to respond or even to track submissions. Again, to me, it's a way to protect yourself, having it filed and keeping support.
Now, is there? I know there's some people out there that love snow more than sunshine, but are they required to file any forms if an American's spending 6 months up here in Canada, or if they exceed the 182? Do we have that rule in Canada for an American? Um, and and if so, is there a form that they should be filling out as well?
So assuming that person is purely US resident, um, their home is in the US, then they would establish or could establish residency of Canada if they create strong ties with the country. Um, And in addition to that, there is also a deemed residency test that looks at exactly the same thing, your presence in the country in Canada. And if it's more than 183 days, again, in a calendar year, you may become a deemed resident of Canada. Luckily, there is a treaty between US and Canada with so-called treaty tiebreaker rules. These rules or tiebreaker look at with which countries still have closer connection, and you can do the same. Exempt yourself from Canadian residency, claim to be non-resident because you have closer ties with the US. So I'd say very generally, it's still important to track the number of days you spend in Canada if the situation is reversed. Keep it under 183 in every calendar year. And if you're under 183 in the 12-month rolling period, it means that by definition, a calendar year, you're also under 183. So that's a good rule of thumb. Keep it under 183 in any 12-month period, rolling period. It's a good idea. And if you cross, there are ways to deal with that. It's potentially filing requirement for non-resident return under the treaty, just to say, yes, I spent more than required, but I'm claiming the treaty protection. We can claim with that potentially, but again, kind of going back to where we started, keep it at under 183 is a good idea.
Okay, so I think we've hit this pretty hard, the 8840, the closer ties. So that's pretty straightforward. And I was just looking on the actual form, and I believe it's Austin, Texas. I don't see it on our version on where it does get sent, but I do remember it being Austin, Texas.
So, with exception of a few forms, Austin, Texas is generally the IRS department, and I didn't see the pictures, but I can imagine it's a huge building facility. I don't know, but it deals with all non-residents. So, all non-resident related filings, even physical non-residents, even if U.S. citizens live outside of the U.S., if they have to paper file, they send it there. So it's the office that deals with everything submitted from outside of the U.S. So that's the default address, pretty much.
Okay, so hopefully I caught this right. So we get the 8840, but when you guys are filing tax returns for an American that's required who's living in Canada with a PR card or has his residency, is there all that stuff is done by paper or is it done electronically?
Mostly electronically.
It is electronically. Okay.
Yeah, for U.S. citizens, most of the returns, again with some exceptions, are filed electronically. It's, as Logan mentioned, non-residents of the U.S., non-citizens of the U.S., non-residents, they have to file on paper. So that's
Okay, so let's get into this 12-month rolling calendar and let's see if we can paint out a couple scenarios here. So the average individual is going to start heading down. The snowbirds are going to go down in November, and they usually come home in April. So in theory, if that's the case, if they looked at a 12-month rolling calendar in October, the day they cross, or maybe it is November 1st, there should be no way that they would ever exceed a 12-month rolling calendar unless they were spending time between April and November. So maybe that's for the average person. But how does that rolling calendar work? And how do they view it?
What do you mean how they view it? What do you mean by they?
The
Just to
well,
clarify.
it's being brought up. It's sorry, they. Um, the same people that get the weather wrong.
Yeah.
Them, those people.
Okay.
No, I think the point I want to make is that it's immigration. It's the border crossing agent is the one that's telling people about this 12-month rolling calendar.
And that's under the B1, B2 visa, tourist visa. Again, we're not immigration specialists, but just looking at some of the rules there, it's a 12-month rolling period. So it's from the date you are issued your visa and cross with your visa. That's going to be the date of your start of tracking days for the visa. Now, in your kind of example, Gary, someone who left in November 1st, and let's say they had no other dates prior to that in the U.S. So from an IRS tax perspective, they're only in the U.S. for 2 months in that calendar year, for November and December. So they're not going to trigger a tax filing. They're under the 183-day SPT rule. And then if you look at the next following year, they're there from January to April. That's only 4 months. So again, not going to be triggering substantial presence test in that year likely as well. So if that was only a year, so from a tax perspective, they don't even need to file an 8840. They're just underneath the SPT rules. Whereas immigration, if they're even 1 day over that 6 months, then immigration they could be offside and have issues when they go back to the U.S. for that second time. They'll see when they cross the border, and they'll be able to track those number of days, and that's when the clients can have issues.
Yeah, and we've been thinking about building this into the app for so many years, and the more and more calls. So we should have that done over the next couple months, I would believe, so people can track it. Now, the other thing we'll quickly bring up, and I apologize, I probably should have brought on one of my friends who's an immigration lawyer that can help educate all of us and make sure we're in the proper lanes. I always tell people I'm not a U.S. tax person, I'm not an immigration officer, I'm not an immigration lawyer. And as much as I know, I probably confuse people more. I know enough to be dangerous. How's that? But the other thing that individuals have to be concerned about is these snowbirds go down south. They go down in November, end of October, and then all of a sudden Christmas comes along, and they come home for 2 weeks. And everybody's telling them that there's a 30-day myth out there that if you're out of the country, if you leave the United States for 30 days, come back to Canada and re-enter, that they're going to issue a new I-94 for you, which is based on the B2 visa. And we're telling everybody be careful, is that it's discretion. You never know. So as soon as you do land, make sure you go onto your border crossing website, punch in your I-94, and see if you're one of the lucky ones that actually gets an extended trip, an extended I-94. But then at the same time, we got to work about this. We got to worry about this 12-month rolling calendar. So other than that, guys, tell us more about anything else. What's the big thing that you guys are dealing with right now at Trowbridge?
Where do we start, Logan? Um, I think one of the biggest thing, and that's definitely number one priority for the IRS, is different disclosure requirements as related to foreign assets. So Canada has similar rules, but they're not that far overreaching as IRS rules. So anyone who is considered a U.S. resident for tax purposes, and I should emphasize for tax purposes, so person meeting who is over 183 days, they are generally required to disclose their foreign assets to the IRS and U.S. Treasury. Foreign accounts are to be disclosed, interest in foreign corporations, if these are certain types of corporations in which a person has higher stake, different other types of requirements. And what we see from IRS reviews, penalties, court practices, that's the number one priority for US. And the logic here is that it's pretty easy for them to impose reporting requirements on banks, investment firms inside of the US, tell us everything about investments that people have with you so that we can tax it properly. But they don't have that strong power over foreign actors, and therefore they put onus on taxpayers as well. You have to report what you have outside of the US, tell us everything, report your accounts, so everybody knows forms F-bar. I mean, not everyone in Canada, but in the US, whoever has to file them, like this is a regular requirement for them to disclose their foreign accounts pretty much every year. Again, the issue starts when you cross this 183 days threshold that we've just been discussing. But to me, and Logan, not sure if you agree, this is really where we have the most issues, where we see the highest penalties, where people didn't know, and non-compliance here can be fixed. There are ways to deal with that. Even if somebody who is a US taxpayer had to file these forms, didn't file them before, there are ways to deal with that. But professional help is definitely recommended for sure.
And another area I've been having a few calls with for at least our partners here have been getting calls forwarded to me as well. Is anyone who's spending time in the U.S. or time in Canada who are also still working. And I think that's where people are trying to spend as much time. So say they're working in Canada, they want to spend as much time in the States. Or I had a call today where someone lives in Boston and he wants to spend as much time as he can in Toronto. But he's still working remotely. Even though he may not be a resident, there may be some other tax implications from a reporting standpoint, payroll reporting, tax withholdings from the company's perspective. So there are other issues that even if you're not a resident, there may still be actually tax filings still required for you or the company or both. And that's where I see a lot more calls coming in right now, especially kind of towards the tail end of the year when they're looking at where I'm going to spend my holidays, where I'm going to be for all of December. I'm going to be working remotely for a month. Is that okay? And so those questions come up a lot as well, especially this time of year.
Well, Logan, when we spoke on Friday, we said we would do a nice segment regarding athletes and entertainers that are going back and forth on the borders, and we see a lot of that ourselves personally as well. I've always mentioned to people that we have an adopted daughter on the LPGA, and she didn't realize she did quite well at the Canadian Open, which is a tournament held every year, that she won prize money, and the money was taken off, it was withheld, but there was no tax returns filed, and she was very, very confused. So we look forward to that show coming up. So many things to cover for cross-border people. But just to kind of sum everything up and make it simple, the 12-month rolling calendar is important. We get it for Snowbirds, and we should have that feature available in the app. If you are in trouble, call the guys at Trowbridge, and of course the last one is the tax implications around the closer ties, the 8840. If you got yourself in a problem, great solution. Call the boys, call the guys. Logan's in Vancouver and Kirill is in Toronto. So we got the country covered. But gentlemen, on that note, I look forward to our next podcast talking about entertainers and athletes, professional athletes. So I'll let you guys get back to your day, but I appreciate your time.
Thank you. It was a pleasure.
Yeah, thank you, Gerry.
Thank you again for listening to the Snowbird Expat Radio Podcast. The best way you can support the podcast is to forward this episode to a friend. And please don't hesitate to like, subscribe, or leave a comment. And before we go, let me leave you with one of my favorite quotes. Be kind to all, the world is small.